United Healthcare stock, ticker symbol UNH. This stock is down 7% on the year-to-date chart, while the overall market, in this case the S&P 500, is up 4%, so that's a big difference to start with. UNH beat on EPS and revenue. However, for the upcoming earnings, analysts expect that UNH will miss earnings. On the 14th of April, they will present their new quarterly results. From a dividend point of view, things look pretty interesting with dividend yield at 1.4% and a 5-year growth rate at 17%. But does this mean that UNH stock is a buy at current prices? Well, in this video I'm going to show you real quickly what UNH does. The most recent earnings report, the fundamental analysis, dividends, returns versus the S&P 500, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does UNH do? United Healthcare is a healthcare and insurance company in the United States. If we check the most recent results, we see that they reported a full year revenue of $324 billion, representing a 30% growth year over year. Cash flow from operations were $26 billion, 1.3 times the net income. Full year EPS were $21.18, and the fourth quarter EPS was a little bit over $5. In here we see that quarterly revenue. In the fourth quarter they reported a revenue of $82.8 billion versus $73.7 billion last year, representing a 30% increase year over year. Net margin also increased from 5.5% to 5.8%, which is also pretty good in my opinion. The full year net margin also increased from 6 to 6.2%. Apparently in the fourth quarter they are reporting lower numbers at the net margin both years. The full year 2022 operating cost sits at 14.7% compared to 14.8% in 2021. This is something that I really like, of course. It's expected to decrease even more, with ongoing productivity gains offsets by business mix and continued investments in growth initiatives. If we check the revenue breakdown, we see that there are two segments. We have United Healthcare that provides health benefits globally, and we have Optum. Optum helps improve overall health system performance, optimizing care quality, reducing care costs, and improving the customer experience. United Healthcare represents fourth quarter revenue of $63 billion, or 56% of the total revenue. And Optum represents $47.9 billion, or 44% of the total revenue. The interesting part here is that the operating margin at the United Healthcare segment is at 4.7%, while Optum is at 8.3%. So with lower revenues, Optum brings in more earnings from operations. United Healthcare grew almost 12% year over year in revenue, and also showed a big increase in operating margin. Optum grew 16.5% year over year, and operating margin stayed the same, which is fine by me, as long as it doesn't decrease. When we check the current results and the 2023 outlook, we see that it's expected that United Healthcare is going to deliver an EPS of $23.15 to $23.65 per share in 2023, versus $21.18 in 2022. So that's a decent increase of 10 to 12% on a GAAP basis. And as said before, UNH will present the next quarterly report on the 14th of April. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Next to that, I also wanted to thank you all for reaching 2,000 subscribers. Let's continue the journey from here. And also let's continue by diving into the fundamentals for this company. United Healthcare is a $445 billion market cap company. PE ratio is at 22, which could indicate that they are slightly overvalued right now. Later in this video I will show you my 3 price targets for UNH, so make sure to watch until the end. because PE ratio is only telling a small part of the full story here. Revenue is at 322 billion, and in this graph we see that revenue went up really nice and steady over the past decade. Margins are going up in the long run as well, which is also something that I really like. To me, this comforts me a lot. They are capable of growing the revenue, but with increasing the margins they increase the net income at a higher pace. EPS is also going up in the long run and is also really steady and consistent, which I really like. Price to sales ratio is at 1.4 right now. Over a longer period of time it's increasing. The current number does look good to me, but keep an eye on the increase. Price to book ratio is a little bit too high in my opinion. I would prefer a lower number here, especially since it's increasing quite a bit over a longer period of time. Price to free cash flow does look good to me. It's under the 20 mark, indicating that they are undervalued based on this number. Analysts expect EPS to increase at low to mid double digits, which looks really good to me. I love to see this number. Revenue is expected to grow at high single digits to low double digits in the coming years, which looks also really interesting to me. Return on assets is sitting at 8%, which is below my 10% minimum, but it doesn't worry me that much, to be honest. Return on equity also looks really good. And the most important number here, return on invested capital, is sitting at 12.8%, which is a really good number. Another thing that I really like here is the fact that it's above the 5-year average of 12%, so they are doing a great job. Current ratio is at 0.77, which is very nice, since it's below the 1.5 mark that I prefer. So this looks also quite good. Historically it also looks pretty good to me. Total debt is sitting at 62 billion. And I prefer companies that can pay down at least a third of the total debt with the total cash position. Right now total cash is sitting at almost 28 billion, so they can pay down almost half of their debt, which is something that I really like. So this does look good to me. Nevertheless, it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back share, pay dividends, do acquisitions and all other things. And in here we see that free cash flow is going up really nice and steady, so this comforts me a lot. Another thing that I love about this company are the shares outstanding. It's going down in the long run. It means when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyway, dividend yield is sitting at 1.39%, which is a decent number. Annual payout is at $6.6 and payout ratio is at only 28%. I prefer 50% or lower. So right now they have roughly 73% left in cash to buy back shares, pay down debt, acquisitions, research and all other things. The 5-year growth rate is at 17%, which is really good. On top of that, they grew the dividends for 13 years in a row, which is also pretty impressive. Overall, a great looking dividend scorecard, but how about the historical returns? I decided to compare UNH stock with the overall market, in this case the S&P 500. Next to that I added some competitors, ELV and HUM. On the 5-year chart we see that UNH had a 117% return including dividends versus the S&P 500 returning 49%. UNH beats the S&P 500 but also the two competitors in this list. On the 1-year chart it looks pretty different for most companies. UNH had a -7% return while the S&P 500 returned -12%. HUM had the highest return with almost 15%. On the 6-month chart we see again a -7% return for UNH, while the S&P 500 is at -7.5%. On the 1-month chart we see that UNH had a -1% return versus the S&P 500 returning flat numbers. ELV had the lowest return with -4.4%. So bottom line, UNH did beat the S&P 500 in the long run. And most recently it looks pretty interesting as well. But how about some fundamentals compared to the other companies? We see that these three companies are quite different in market cap and employees. UNH had the highest market cap and also the most employees. UNH has a decent PE ratio, but both ELV and HUM have lower numbers here. Price to sales is also looking quite good for all companies, and so does the price to cash flow. The price to book ratio looks high for all companies, so to me this is also pretty interesting. Revenue growth year over year is the highest at both UNH and ELV. The 5-year compound annual growth number is also the highest at ELV, but it has to be said that it's pretty close, so no big winner here. But with the net income compound annual growth rate, we see that UNH is at 13%, while ELV is at almost 8%, and HUM is at only 1%, so UNH is the big winner here. Last but not least is the free cash flow compound annual growth rate. It's sitting at almost 14% for UNH, which is a really good number. But both ELV and HUM have higher numbers here. UNH has the highest gross profit margin and the highest net income margin. On top of that, they also have the highest free cash flow margin. Return on equity, return on assets and return on total capital is also the highest at UNH, so they are the big winner here. All companies in this list have more than enough money to pay down a big chunk of their total debt. But UNH has a lower number in ratio compared to the others. The last thing that I want to check are the dividends. Dividend yield is the highest at UNH, sitting at almost 1.4%. Payout ratio is the highest at UNH, but it's still a really good number. The dividend growth is also the highest at UNH, and also the consecutive years of dividend growth is the highest at UNH. So to me, they are the big winner here. Overall, I think UNH did a great job compared to the competitors. So is UNH still a buy at current numbers? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth, I'm filling in 7%, 8% and 9%, since I think they will increase the revenue at the same numbers versus the historical averages. Next to that, it's also based on the analysis expectations and the current outlook. Profit margin, I'm filling in 6, 6.5 and 7%. And for the free cash flow margin, I'm filling in 7, 7.5 and 8%. For the PE ratio and the price to free cash flow, I'm filling in 18, 19 and 20, since I think they are growing at high numbers and have great fundamentals. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, UNH is at $482. I hit analyze and we see a lot of green numbers. We have a low price target of $379 to $442, which is a decent drop from the current stock price. We have a mid price target of $457 to $527, and we have a high price target of $548 to $626. To me, the mid price target is the most justified here, since I expect the company will grow at average numbers within these scenarios. Based on this price target, we have a range of $457 to $527, showing that it's within the middle of this range, but more leaning to the lower side of this price target. My final conclusion is that I really like this company. I wasn't paying attention to this stock for a long time, but recently it has caught my attention. I think I would love to see a little bit higher dividend yield, let's say 2%. With the current payout ratio sitting under 30%, I think it's no risk at all, but probably they are not going to increase the dividends that much. Most fundamentals look really good to me, and I really like to see the consistent growth historically, but also in the future outlook. To me, this is a buy, but I will be waiting after earnings to see what happens. For now, I'm waiting and I've added them to my buy list. In my opinion, this could be a great dividend growth stock. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.